Hello everyone, K Kim here. Thank you for tuning in for tonight's market update. Again, my name is K Kim with the Traders Club, 2tradersclub.com. And tonight we'll look at the market. I thought it would be fun to show my face here. This is what I look like, if you've been wondering. But anyway, so before we get into it, I do want to expose this Lunatic. He's been coming in since 2011 and saying that this whole market is going to crash. 2011. I can prove that to you. Okay? You know where 2011 was? This is 2011. Do you know where we're today? This is where we're at. So every year, this guy has been coming saying that the whole market is going to crash. And let me tell you what. Let me tell you the definition of market crash, because there are actually some people ask me, what is the definition of crash? Here, let me do that first, so we can get that out of the way, so you kind of know what I'm talking about. And this is kind of universal. You know, if you're kind of questioning this, you don't know what market crash is, then it's just a little bit difficult for you to understand anything else. You know, when you go to McDonald's, you know what Big Mac is, right? You don't know what Big Mac is, then it's really difficult to understand every other menu. So when you come to the market, if you don't understand the bull market, bear market, the crash, then it's very difficult for you to trade this market. So, and some people did have to ask me, and again, I'm not trying to pick them, pick on them or anything. It's just, I guess maybe you need to read more books on the market, maybe do a little bit more homework on it. It just, if you start asking about these things, it's just a little bit difficult. Anyway, so let me just do a little tutorial on the market. So this is what we call a bear market. So there's so many people been calling that we've been in this bear market. This is not a bear market. There's a reason why you think we've been in a bear market, and there's a reason why you think we've been in a crash. Like a market crash in 2015 and 2016. We didn't crash. This right here is crash. That right there is a bear market. This right here in 2000, the tech bubble, that's a crash. That's a bear market. We had about 2 years of bear market. And in 2008, we had a house prime mortgage crisis, financial crisis, and all of that, right? That's a crash. That's bear market in 2 years. This right there since 2015 and 2016 here, that's not a crash. That's not a bear market. That's a sideways movement. That's what we call consolidation. Okay? We are actually still in a primary term bull market. Within that bull market, we had pulled back. And we digested the gain. That's exactly what happened. I've been advocating this. I've been preaching on this whole year since 2015 and 2016. They were still in the major primary term uptrend. We're seeing some shakedown. And I didn't discount the fact that there are poor fundamental data in the economy. There's some, concerning signals in the technical data, looking at like a transport, New York Stock Exchange Index, things like that. I didn't discount the fact. But what I talked about is there's a higher probability that we will move to the upside concerning the fact that we're still in a primary term uptrend and we did not see a curve. We did not see a bear market. So do you understand now that we're not in bear market? We were not in a bear market. We did not see a crash. That's a crash. Okay, when crash happens, market get into recession, economy get into recession, people lose jobs, companies, small businesses close down, big company. You've seen back here in 2008, 2009, Lehman Brothers got go bankrupt, Bank America, Citigroup, AIG, and all these different groups needed bailout programs from the government. How did the government get the money? They printed it everywhere, right? And that's another subject. And then propped up the market and we got up. That right there, that crisis right there, ladies and gentlemen, that's a crash. That's a bear market. That right there, the tech bubble that we've seen back in 2000 all the way from 1995, that's what we've seen. Once we topped out in 2000, we crashed. 2 years of bearish run, 2 years, almost 2 years of bearish run since 2008 to late 2009 or mid 2009, right? And it happened mid 2007. Mid 2007 we crashed and came down. This, what we call crash, that's what we call a bear market. The reason I share this with you is this guy, this lunatic, this moron, come on a news, a national TV, national publications, a prominent publication where majority of people listen to since 2011, saying that we're going to see a huge market meltdown, a crash, saying that this thing is going to go to, you know, like nothing. And so, let me tell you something. And if you've been saying that there's a crash, we have in a market, you know, bear market, there's a reason why you say that. Because you've been looking at this too closely. You're looking at it on your 15-minute chart every single day, tick by tick. You're sitting in the couch, in your desk, and looking at this every hour, right? And because of that, it felt as though there was a crash, because we did see some steep declines in 2015, 2016, right? So, look at the big picture. Understand the big picture. If you understand the big picture, you understand the probability of this outcome, because nobody knows for sure. Nobody has crystal ball. I've been saying this, nobody. If anybody come out and say that they know for sure something's going to happen down to a day, then you run. So, okay, so this is CNBC article. Wednesday, August 2011. You know where 2011 was? Just let's make this perspective so you understand where 2011 was. This was 2011, right here. Okay, this is when Marc Faber is saying that we're going to see the market meltdown. But the bear market is starting. The bear market is starting, Marc Faber. Bear market is starting. Again, where were we? Right here. Actually, bull market was starting, not bear market. Okay? All the way 2011. And I wonder, how does this guy been calling this since 2011? This guy's been losing money since 2011. Because obviously, if you think the bear market is starting in 2011, you ain't going long on it. You ain't investing. You're buying puts. You're short selling. You're doing everything that is bearish in the market because you're so confident that the bear market is starting Marc Faber. 2011, 2012. Prepare for massive market meltdown. Prepare for massive market. Again, 2011 he came out say that, and in 2012 he came out say that again. So let's examine. So 2011 here, okay, and then 2012 right here. So from here to here, what did he do? What has he been doing? I mean, I wonder. Here, let me put myself right here. I wonder, what has he been doing? He probably lost so much money, and he just still, and it's funny how we saw a little bit of pullback right here. Maybe that got him, oh my, there it is. That's how it works. That's how this market traps you, right? It's going up and going up, going up. And then this is probably a lot of people right now, where a lot of people thinking there will be market crash in 2016. Probably they're looking at right here, and we made new all-time high on the Dow Jones and S&P 500. New record high, right? And New York Stock Exchange is not there yet, but I think NASDAQ Composite is right there. And other indices are following. You know what 2016 market crash theorists, the liars, are thinking? That this thing started going up unless we see a pullback. That's when and I think there's going to be a pullback. That's when I think they're like, aha, I told you. But they've been saying, aha, since 2011. They've been saying that, aha, in 2000, just June, and when we had a Brexit panic. They've been saying, aha, 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 every pullback. They've been saying aha, there you go. So Marc Faber has been calling market crash in 2011. And he's calling in 2016. Here, I'm going to go to it. Okay? So, 2012. 2013, he's back. Marc Faber, look out. 1987 style crash is coming. 1987 style crash is coming. How can he say this? How can he say this? You know what he needs to say? What he needs to say is this. Yes, back in 2011, I came out saying that we're going to see a crash. We're going to see a bear market. It didn't happen. I was wrong. I want to just apologize. And I had shortcomings in my analysis, and I, undermined it. And so, man, it just, market has been going up. But I think, yeah, maybe 2013 market is. I think though 2013 the crash is gonna happen. This is 2013. But I was wrong in 2011 and 2012. That's what he should have said in 2013, not 1987. Like he has like build up his case. He gotta make it bigger, more provocative statement just to make up for what he has been saying. Cause he's stupid. He's been exposing himself. So now he knows this. He knows this. So he has to say even bigger, like something, because nobody will listen unless he comes out and say that we're gonna see 1987 style of crash coming. Do you know what he's saying? This is 1987, right there. That's a Black Monday, 1987. You guys remember? I mean, I was like 7 years old, so I don't remember. So I don't know if some of you guys been alive and trading at that moment. That's what Marc Faber is saying. We're gonna see 1987 style of crash in 2013, and oh, I mean, how can you come out and say this? How do you say this? You're wrong in 2011, 2012. How can you come out and say this? Why? Why do you say this stuff? Why do you, inflict fear on these citizens of America? They need help. These people need help. They need guidance. They don't know what they're doing. Most people don't. I'm not calling people stupid. It's just most people don't know what they're doing. Do you think they're sophisticated in the market? They have some money they saved up and they want to put some money in the market and make some money. Let them do it. Why do you have to come out in 2013 and say that we're going to see 1987 style crashes coming? Why? You're wrong in 2011. You're wrong in 2012. You have to come in 2013 and say this. And most people got scared because of you. And they couldn't profit. They couldn't profit. It makes me mad. Because I understand if you call the crash correctly, you become a hero. And you get a lot of attention in the media. And maybe there's some agenda that he was hiding. Maybe he wants to sell something. I don't know. 2013, when he said that we're going to see a 1987 style of crash. Okay? It's right here. He robbed you. Do you understand this? If you were scared because of this guy and you pulled out your assets here and you started short selling or started buying puts because you wanted to, because in crash you can make money fast, right? He robbed you. Market went up for another 2 years strong bullish move. And you could say, well, okay, we started pulling back. Yeah, but if you're patient enough, you're making more money in 2016. Right now, you're profiting it. Why don't you understand this? And why do you listen to these people? Let's continue. 2014. Okay, do you see this? Do you see this happening? Because in 2011, the way he approached it was kind of sad. I mean, it was still stupid. It was still like why? Why do you think there would be a bear market? But he was not as provocative. He's like, the bear market is starting. Yeah, the bear market is going to start. And then 2011, 2012, a little bit stronger. Because he's been wrong in 2011. Prepare for massive market meltdown. Right? Prepare. Because this is just meltdown. You know what I'm saying? And then 2013, now he's getting you just saw the chart that I shown you? 1987 star crash is coming. You should be scared. You listen to me. You mark my word. Because this thing is going to crash like a Black Monday. And everyone's going to lose jobs. Everyone's going to lose their asset. That's what is coming. You've been warned. Right? And then what? Listen to what he says in 2014. 2014 crash will be worse. Do you see this pattern? This is a technical analysis. This is a technical analysis on Marc Faber. Is it Faber or Faber? I don't even know. I don't listen to this guy. I knew because I've been trading back then, and I've been hearing his thing, and I don't trade off of what people say on CNBC. Obviously, I'm glad that I don't listen to him. But he came out saying it again in 2016 after S&P 500 and Dow Jones making all-time record high. He coming out saying it again. So I just was pissed off. Why does this guy just come out and say that you're wrong? Tell the whole audience, tell the whole world that you're sorry, that you're wrong since 2011. Admit it that you're wrong. 2014, the crash will be worse than 1987. Okay, let's just make this a little bit more realistic here, okay? 1987, okay? He said it's going to be worse than this. It's going to be worse than that. Go read about what happened in 1987. Go read about it. This is when it says 2014. Go read about this. How many families suffered? This guy pisses me off. I hate this guy. Tell people that you're sorry that you said this. He said that we're going to have night. Why? You know what's funny? I've been making videos since here and here that market will not crash. That we're going to see new record high. Where the market, we're still in a primary term uptrend, and there's high probability. I didn't say, there's a high probability that the market is going to continue higher. And it's interesting how so many hate mails, hate comments on my YouTube channel. Go read it. It's funny. It's actually very, very funny. Go read it. Maybe I'll expose them right now after this. I'll do it. I'll go through every comment and I'll expose them. And they're like, nah, the crash is going to happen because this person said it, because that person. Marc Faber's been saying it since 2011. You're the same guy who's been listening to him. And what? I don't get it. Why do you want the market to crash? You're that selfish? You only care about yourself. You want to make big money fast, and now you're slaughtered. Now you're done. Because this market will not crash. We have a very, very high probability this market will not crash. We're going to see a 5-year bullish run at minimum. Again, with, its ups and downs in the intermediate term. Again, I have tons of videos you can check out on my YouTube channel. But you know what Marc Faber said? In 2014, okay? This is 2014 right here. 2014, okay? Right here, we're going to see a crash that is worse than 1987, the Black Monday, the chart that I've shown you. Worse. So if you started pulling out your money from your asset and start short selling, or if you've been listening to him since 2011, so maybe you just keep adding to that short, you're ruined. You're done. I don't believe this guy. He needs an apology. Marc Faber, Fuller, I don't know who you are. If you listen to it, come out and say you're sorry. Please. Come out and say, I apologize because I was foolish and dumb. I didn't know what I was talking about. I thought I knew, but I didn't. And I lost a lot of my money, a lot of my clients' money, a lot of my family's money because I've been shorting this market since 2011. 2015, Marc Faber unveils the biggest surprise for 2000, the greatest danger facing the world. Do you see that? This is awesome. This is amazing. This guy, right there, this guy. It's amazing. This guy is the most amazing man ever. And you know what's funny? They keep inviting him in. Why? Why do you keep him? He's been wrong since 2011. Don't you understand this? It gets bigger every year. The bear market starting 2011. The prepare massive market meltdown 2012. Oh my God, 1987 style crash is coming. 2013. And then 2014 crash will be bigger than 1987. And then 2015 he unveils. He unveils. It's not a prepare. It's not enough to just say prepare or the market. There could be bear market coming. Their market starting. Prepare or look out. 1987. Oh, it's gonna be worse. And then now it's just unveils the biggest surprise for 2015 and the greatest. Okay. Greatest danger facing the world today. Yes, that's what's gonna happen. I know, because I've been wrong since 2011. I don't want to say I'm sorry. I don't want to say I was wrong because that's gonna diminish my credentials in this world. I've been shorting this market since 2011. I lost tons of money. All my clients left me, but I still want to come back somehow. So I need to call this once for all and then say, I told you so since 2011 that this thing is going to crash. And I've been saying it 2011 and it's 2016 today and market is making all-time high. And K. Kim says this market is not going to crash and we're going for at least 5-year bull market, maybe even higher. Well, towards kind of a late 2000, because this is early 2015, he says he unveils biggest surprise for 2015, greatest danger facing the world today. And then 2015, towards July, he kind of just kind of saying, well, you could drop up to 40%. That's still very provocative. But compared to what he's been saying, here, massive market meltdown. The bear market starting. Again, remember what we said about bear market? This crash to 1987 was worse than this. The biggest surprise, the greatest danger facing that. And then he goes, yeah, we could see 40% drop, up to 40%. And CNBC invited him back. CNBC, if you're listening to me, please stop inviting this guy. You invited him in 2011. He was wrong. Don't you have some kind of a some sort of statistic sheet or something? And so if I was the producer of CNBC, I would be like, why am I inviting Marc Faber? Marc Faber, whatever. Why am I inviting this guy? He came 2011. He strayed all the people. He called things wrong. He never apologized. Why write about this? Who are you? Matt Belvedere? Who are you? Why are you writing this? Who wrote this? This guy wrote this 2011. Stop writing. Matt Stop writing! This guy called it wrong since 2011. Every single year he was wrong. Comes 2016.
I don't think that the
Comes 2016. Look at this guy. Marc Faber. Investors are on the Titanic. But he gets a little bit lighter. There are still a few days to travel. This guy is just really, things are not working for this guy. Maybe he was great. Maybe you guys respect him. You know what? Maybe you respect him because he was young back then. His mind was sharp and he called things right back then. Now he's getting old, you know. He had all the wealth that he could possibly have, maybe. Maybe he's getting lazy in the market. Who knows? This guy is wrong since 2011 and he never came and apologized. He never admitted that he was wrong. Now it's 2016, June. Investors are on the Titanic. You know, but Titanic doesn't seem that much when you say stuff like 2014 crash will be worse than 1987. When you unveil the greatest danger. When you said that massive market meltdown. When you say bear market is starting. Yeah, investors are on a Titanic, you know, the whole thing could go to nothing. And you know what? Actually, now I think about it. You've seen the movie Titanic, right? Titanic. Celine Dion, you know, Leonardo DiCaprio. The whole thing went to nothing. Everybody's so happy. And then the Titanic, you know, it's true story. There's a movie. I love that movie, actually. That's one of my favorite movie. And please, just because I like Titanic, don't call me names, okay? I like Titanic. Anyway, so Titanic went nothing. Everybody died. So now I think about it, actually, he didn't line it. He's going for just the biggest bang. This is the biggest one of everything. So Titanic, everybody died. Except only few people survived. Few people survived. But everybody died. In this really cold ocean. There's this like huge rock, like this ice, you know, and then like Titanic crashed. And then like it sank, and they're like, God can't sink this ship. You know, those people are saying that, and then it died. It like sank, and that's what he's saying. The whole market is gonna like sink, and everyone's gonna die. This guy, you wanna believe this guy now in 2016? He's been saying this since 2011. August 11, 2016. That's today. Okay, Mark, are you the same guy who... No, that's not the same guy. Stop it. He's been coming in 2011, calling the bear market starting, okay? Okay, let's just recap here. This guy right here. He's been coming every year. Every freaking year. From here. Okay, S&P 500 rose since his call, first call, 1,100 points. 1,100 points. So many people could have profited from this. The regular people. The people who sit there and watches TV and get their get their advice. And you, Marc Faber, you ruined it for them. You might have even ruined their life. They might have completely lost their wealth, their assets, because of you. That's what you did. And you never once apologized to the public. You're the biggest lunatic ever. Again, I don't know this guy. He might have been great when he was younger. And if he was, I respect it. But right now, and you know what? People are wrong. I made wrong calls. You know, I made wrong calls. And you guys remember, you know, I made a right call in 2012, Apple crashed. And then, you know, 2013, 14, I said that Apple's going to, you know, Apple has bottomed. Then I made right calls. And then, you know, 2016, Apple started coming down. I never saw it. I thought that it's going to continue higher, but the Apple came down. Here, I'll expose myself. And I said, no, this is not the first time. I said I was wrong. I said I never saw it on my, you know, right here. Called a crash, came down, called a bottom, went up, and then I said somewhere about here that it's going to continue higher, or you know, I didn't think that there were going to be this kind of crash, and I said, I think I made a video somewhere about here back in late 2015, and then I said, hey, you know what? I didn't see that coming. I didn't see that coming. I didn't see that coming. I really didn't see that coming. And now I'm calling that the Apple is, you know, Apple is going to reverse, where there's a bottoming signals. If you go to my, you know, if you go to my website here, twotradersclub.com, you can see that. But we're dealing with the human beings here. You know, we're people. When you make a wrong call, say that you didn't see it, or say something. Make some remark. Say that you're sorry. Marc Faber, why? Marc Faber is calling for an ugly stock market crash again. Yeah. Aren't you tired, Mark? Aren't you tired of this? I mean, you've been saying this. Okay, is this guy exposing this guy? Oh, okay. This guy might have been exposing. Okay, this guy's a smart guy. Okay, Mark, my bad if I was just, I didn't know at first you're endorsing this guy, but this guy's kind of smart, I think. I didn't read the whole thing because I don't want to waste my time. But I don't know what he's doing. But he's saying that he's been calling market crash like I'm doing. This guy's a dumbass. I'm sorry. Just please. I'm talking about Mark. Please, bear market is starting 2011. No. It's not coming. Bear market is not starting. It's not. Don't listen to this guy. Listen to me. listen to this guy. You want here? One thing I'm not gonna tell you. If you watch my videos, if you've been following me, stock to Twitter, when was the last time that I said 100% guarantee certain things gonna happen? I'm always reasonable. I'm always rational. If you read my videos, watch my videos, listen to my videos, I always say, hey, there's a great chance. With these evidences that I have, there's a great chance, right? All right, okay, so January 2016, let me make myself smaller. Bulls one last fight for higher in-depth analysis. Here's the reason I'm showing. I'm not showing it to say I told you so, I called it. Nothing. Okay. What I'm saying, when I wrote this article, this was like down up here. Everybody seems like, oh, market is bullish, bear's stupid, you know, this market crash theories are dumb. But be honest with yourself, because you didn't listen to me when the market was here. You know how I know? I don't know about you, you're watching right now, but most people, you know how I know? Because my YouTube videos weren't getting views until markets started going higher. Because when everything looks so gloomy, and when I publish this article that supports a bullish idea, nobody wants to listen to, you see. And then when this thing starts to move higher, then finally, oh my God, Kay was right. And I'm not trying to say that, you know, I'm not trying to say that, hey, you know, I got it right and I called you. So no, what I'm saying is, hardest thing, you know, in the market is, hardest thing in the stock market is when the whole world is against you. You know, you gotta trust your analysis. Sometimes that's what it takes. Stand alone. stand alone. These are the videos that I put. If you go back to my YouTube channel, there's not one time I had analysis that supports a bearish idea. Again, I was doing a primary analysis. Everything I usually do is a long term or even an intermediate term. I don't do anything short term, anything day trading schemes, none of that. If you go to my YouTube channel, if you go to my blog, you will not find bearish idea, even in the worst moments. Okay, no market crash, semiconductor marching the all-time high, stocks the market crash, a reversal, importance of bullish divergence. They will not see a bullish idea, bearish idea. And you know what? Why am I showing? I'm not trying to compare myself to Marc Faber. I'm not. That's not what I'm trying to say. What I'm trying to do is that nobody knows for sure how the market works. I mean, the outcome of the market. Nobody knows. Nobody can guarantee it, right? So you need evidence. How do you find evidence? There's opinion. Do you know that people who's been calling market crash in a fundamental way, they could bring in the negative fundamental data and then just kind of plug it in and saying, well, this and this reason why we're gonna have a market crash. And then the same person could come today and bring in the positive data. Well, this and this reason why we're going to continue higher. Because now the market looks bullish. So basically what I'm saying is this. In this market, in this world, there's always going to be a bullish fundamental data. There's always bearish fundamental data. There's always two different things. And then when market is bearish, people just bring in this bearish data and say, hey, this is why this happened. When market is bullish, then bring in the bullish data, and this happened. Trading like that will not make you successful in this world. This is why technical analysis is at a value. Dow theory. The trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And I've been saying this since mid 2015. The trend is assumed to be in effect, assumed to be invalid until it gives us a clear signal that it has been reversed. And most people ask me, what is that the sign of clear signal that has been reversed? Go on my YouTube channel, find the video that is a 2008 versus 2016 analysis. You know what? I'll find it for you. I'll find it together. If you want to know what okay, this video right here. Okay, 2008, 2016, another market crash. That video, I explained to you what it means to see a reversal pattern. So what I was saying is that we didn't have a reversal pattern. We had sideways market, and meaning that we're going to continue high. You know, another thing, I was going to share this, talk about this. I mean, this is from Stock Twitch, Jay Borman. He tweeted on it. I think this is great. Just basically talking about all these people, and I don't know a lot about these people, only Marc Faber, you know. But all these, I'm guessing all these people are, you know, prominent people. I'm not sure. Again, I don't follow these people. I stand alone in my analysis. I don't listen to anybody. But anyway, so all these people have been calling, crashing that ahead back in 2010. Sell, get liquid now. I mean, if you bought it here, you banked. If you listen to them, you're bankrupt. All these people. It's just crazy. It's just crazy. You know what? You know what would be funny? just kind of go and see, because remember I told you I was gonna do I was gonna
Nadex binary options. Never heard of them? Maybe.
I'll finish with this, but it might take a little bit. Let me make myself a little bit bigger here. It's just, again, this was May 30, 2016. It's about 3 months ago or so. 5 reasons stock market not to crash. Gold and silver price to tank. I'm just going to show maybe a little few of them. And you know what, great video. I mean, I respect that. That would be volume. You know what, indices, the volume, don't worry too much about volume. This market's been going higher without volume. A lot of times when market, you know, start to move to the upside, you would have a lot of volume when it start falling, and then you have a lot of volume, and then it will diminish a little bit, and then it will move higher. Especially in the indices, I wouldn't put too much weight on the volume. I think individual equities, I'll put more volume there. I lost thousands shorting this market of other people advice. This is one of the reasons why, you know, don't listen to these people. This guy's funny. Month ago, you made me laugh. I'm gonna save this video and watch it again 6 months just to laugh. Yeah, you know, see, there's a few things that I see about you just in this comment. You think you know the market is gonna crash, and you think you know everything of the stock market, and so then you think that my video make you laugh. So you're arrogant. Second, I'm gonna say this video and watching it in 6 months. So you're so sure that I'm gonna be wrong in 6 months. You know what? I'll say this and I'll talk to you again in 6 months. And so you're gonna just pretty much expose yourself saying stuff like this. I mean, going around on YouTube making stupid comments like this, it's just tell you the level and professionalism of people who are trading this market. And this guy probably, you know, trading, you know, in his mom's basement, maybe $10,000 account, just scalping here and there. Maybe bought a lot of put options just so he can, like, maybe he watched The Big Short and he wanted to make just huge, you know, tenfold kind of income or you know, profit, and then after the market moved all-time highs, probably not doing so well. Okay, this thing is going down. Man, I don't know, now I can't. Blah, blah, blah. Daniel Wagner, so the opposite of what you said will happen then? No, actually exactly what I said is currently happening. Agree, it's not exactly like 2008, but it looks worse. No, it doesn't. Doesn't look worse. Oh, this guy's funny. Mike Tran. If this guy's right, why the hell are the biggest billionaires in the financial world are screaming bears in stocks, bonds, and real estate, just to name a few? Bill Gross, I don't know who that is. Stan Druckenmiller, Sam Zell, Carl Icahn. Carl Icahn's been calling market crash since 2014, I believe. Jim Rogers, Marc Faber. I just exposed Marc Faber. K Kim using technical analysis, which is purely manipulated and rigged. You know what's funny? You see, technical analysis is the only thing that is not manipulated and rigged. All the opinions are manipulated and rigged. The people who come out and saying things is manipulated. They say it in their opinion. Technical analysis is a pure price action. So it tells you the sentiment of now, what's happening now, even behind it, even underneath the hood, that you can see it through price action. K Kim does not know what he's talking about. Thank you very much for that comment, Mike Tran. I hope you know what you're talking about. I hope you, you know, made lots of money shorting it, buying puts. Don't worry about the volume there. Interesting analysis, Henrik Wellen, and you're doing the exact same mistakes as the big bangs with all their experts in computer algorithms. I'm making exact same mistakes as them. Blah 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 da da da. However, to confirm the up move, we have to break above all-time highs, get out of sideways ranging. What is it? Ranging? Is that a right word? Yeah, we did get above the all-time high. Of course, when I was not analyzing it, I was anticipating the all-time high. So. If you trade invest off a few trade lines and oscillators, you won't last very long in this market. If it would only be easy. No, it's not that easy. So you don't know anything. You don't know. Huran Sharsteini, you don't know anything about technical analysis. That's why you said that I have a few trend lines and oscillators. If I did an in-depth analysis on the market, it will take me 3 hours. In these videos in 30 minutes, and you won't even want to sit there and listen to it because you won't understand. I'm doing this as small as possible, as easy as possible so you can understand. He said, mark my word, that the whole thing's a trap and it's going to be over soon. Mark my word. Mark your word. You're just like Marc Faber. You're foolish and you're dumb. You do not know what you're talking about. If anybody mark your word, they'll just want to kill themselves. So please do not say this kind of stupid comments on my channel. And do not follow me. Do not listen to me. Just go somewhere and just do your own thing. It's just even listening to it, I just feel bad for my ears. I mean, I get it. There could be some constructive comments, something constructive we can communicate or discuss. But these are just trash, man. These guys just come out and say just a stupid thing. Gilbert Nowak, 552.9 trillion derivatives, and you think this is sustainable? You fool. I'm a fool. Gilbert. Yeah. Chris Benavides, don't jump out of high-rise window when it comes down. It looks like you jumped out of the window, just like how Johnny, thank you Johnny Stevenson, that's exactly what I want to tell him. It looks like you jumped out of the window. Hope you're okay. I hope you're okay, Chris. Because all those, you see that there's a commonalities on these people hating this market crash. They're so sure. Marc Faber's been sure since 2011. They're so freaking sure, like they're brainwashed. And these people are in the same boat. They're saying the same thing. They're so sure. They're so sure that this is going to happen. And even calling me names. That's incredible. Incredible. Maddie, all these stupid people who doesn't know anything about technicals are laughing out loud. Good to stay positive, buddy. For is a prosperity from any evidence things get better. Listen to yourself, man. There's not a country in the world that's doing well, and that unemployment is only increasing. See how you lecture us when U.S. turns into Venezuela this year. Good luck this year. Big uptrend. Read inflating bubble. Ha. This guy is also calling me a stupid. And you know what? I call people stupid. So I can't have him not call me stupid. I'm listening to myself, and price action is happening just like the way I thought it was going to happen. So Mehdi, please just just do your own thing and stop putting in these stupid comments. You're just angry because you know deep down you know I was right. You know that could be deep down. You know why people are angry? Because deep down they know I could be right, and they put so much money in their market, in their short selling and puts, that if I keep K Kim is right, oh my God, I'm gonna lose share. Oh my God, my life is over. So they're angry. So they have to say stupid comments on YouTube behind their computer. Please, please. Chrysler, it happened several times. Why not again? Nothing has been fixed, and the Feds can raise rates, or it will immediately crash, just like it did a few months ago. Why do you think the Fed just said no rate through 2016? Immediately crash. Okay. It happened several times, why not again? That's your analysis. So it happened several times before, so it's going to happen again now. That's your whole perspective of the market. Very smart, very sophisticated. Hyena, fail. Yeah. Thumbed up, but I don't think you'll see a huge move down. Well, it didn't. Mike Trent, I don't know what that means, but you already exposed yourself as a fool, so I'm not gonna. There's more. I just went through this just for fun. I was gonna do a market update, but I just got, man, Marc Faber, please, you gotta come and, you know, let me just look at S&P 500 real quick. You know, as of today, you can see that we came down right here. Looks like 10 EM is holding, 20 EM held. So, I mean, as long as 10 and 20 and 50 is rising, it's the minor term. Minor term sentiment is bullish, and we gotta continue to give benefit of doubt to the buyers. But once we start to lose, I'll just tell you, I mean, it looks like it's going to continue higher. Maybe we'll even hit some of those levels here, but I'll do another video update next week, and then we'll talk more about it, see what happens. But as of today, the sentiment of the market is bullish in the minor term. Now that we're staying well above 10 EMA, we came down to 10 EMA, and then we gapped up. We're looking at 20 EMA. It's bullish, 50 MA. So we're minor term bullish, intermediate term bullish, primary term bullish. I don't have 100 and 200 estimate. They are moving up as well. They had a golden cross. And so as of today, benefit Dow continues to go to the buyers. And one last thing, when the market starts to really respect the technical levels, you know, like it was holding that 10 EMA, and it lost that 10 EMA, and then it came down to 20 EMA. And then we jumped off the 10 EMA above 10 EMA, and then we held that 10 EMA, and we gapped up today like this. When you see the minor term respecting technical moving averages perfectly like this, this is, you know, that market has broke out of this consolidation, this almost 1.5 year of consolidation pattern. And then we're getting back into an uptrend, primary term uptrend. Because once market starts really shaking big like this, it will not respect any of these minor term technical data or technical levels. It will only respect primary term technical data. So that's the reason why in 2015, 2016, all the analysis I've done is a major primary term, the big picture. Because the minor term is just gonna get slashed when the market shakes like this. But you can see how now that it's calm, how the market is calm. We're not seeing a huge move. We're not seeing huge volatility. Looking at more of a daily perspective, we're seeing the market respecting certain levels. We lose that level, and then we got 20 MA coming up and break, supporting it, and then we gap up. We move sideways again. We held that 10 and then we broke higher. You see how the market is calm and start to really respect these minor term technical levels. It means that finally this market has came out of this shakiness, dire, fearful situation, and then we're ready to, cultivate primary term uptrend. Doesn't mean that it's gonna always hold 10 and 20 MA. I think, you know, you could continue grind higher, but sooner or later, we're probably going to come and retest the, you know, 50 MA. And that's how this market moves, guys. You got to understand this big picture. I mean, even if you look at, you know, 2011 correction, you know, even like, you know, 2012, let's go with the 2012. You'll move higher, it'll come down, it goes higher, and then you see sooner or later we come down and then we respect that 50 M. Do you see that? Do you see how in 2012 how many times it respected it here, and then we got 50 MA started getting respected? And what does that mean? We got these higher lows. That means we're in an uptrend. I mean, if I put in 10 EMA, 100 SMA, 100 SMA, 200 SMA. See how? Excuse me. Okay, you can see how, you know, these moving averages are respected perfectly. Go up, comes down, hit that 200 SMA, go up, hit that 50 MA, and you know, in between, what does it do? Before we hit 10 before it 50 MA, you see how the 10 MA start continue to act as support. You see how it's calm. And then once we lose that 10 MA, we come to 20 MA, and then we attempted a bounce, but we lost it. What does it do? Come down to 50 MA, and then market continues higher, and then we hold that 20 MA and then 10 MA, and then move higher. You see how calm that was versus 2015, 2016 when we saw the wild swings. So stop looking at things like 5-minute chart, you know, 30-minute chart, and just looking at the chart every single day, tick by tick, and you're just getting scared the hell out of yourself. You just want to pull your hair out. Oh, well, my light just went out. My light just, oh, wow, it's just now, it's just, it came back, but it's, I think I need a new, my camera light here. So I think this means I should go. So anyway, have a great night. Hope that this analysis is interesting for you guys. Here, it just really bothers me. I'm gonna turn this off because it was like flicking so much. Now it's a little bit dark, but anyway, you know, I just want to say before I let you guys go, I just want to say that my motive is not just to pick on somebody, but to expose. It's important that we understand that there are people out there. There are even publications and there are different, you know, TV stations and stuff like that. They'll bring in people and say things just because they're prominent, just because they are, you know, well known, just because, you know, doesn't mean that their comments is worthy to read or worthy to be respected. Just because Obama's a president doesn't mean that everything he says is true. We know this, right? You know, so I don't want to get into politics. I won't go there. But so there's always manipulations because the people are emotional. They have feelings. Their emotions. They're guided by greed and fear. Everybody is. All of us. When we start to see market react in a bearish way, it is so easy to just pull bearish data, right? You know, when market starts to really shake like this, it is so easy to just bring in economical data that supports bearish idea. And then when market goes up like this, it is so easy to say, oh, the Fed is never gonna, you know, raise rates, and you know they're all gonna prop it up, and so this thing never gonna crash. And there are people always saying stupid things like that. When it's bearish, they have a bearish analysis. When it's bullish, they have a bullish analysis. What you need to do is look at a big picture, and when everything looks gloomy, you look at that as an opportunity, and you stand alone in your own analysis. If you can do that, you'll be successful in this trading. And only way we shut out our emotions and fear and greed and feelings is the technical analysis. Technical analysis is the only way to trade without guided by emotions and feelings. And it doesn't mean there are people who use technical analysis and still guided by their own greed and fear, because they're fearful, so they only see bearish technical data. They're greedy, so they only see bullish technical data. What you need to do, what I do, I bring in bullish data, bearish technical data, and then I come up with what does give me, right? What does give me a greater weight? What is likely a chance that has higher probability? And that's exactly what I was talking about. Remember, I talked about the primary term uptrend, the big picture. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. There's a reason why I was bullish in 2016 and 2015. In a primary term, not like bullish, but like there's a greater chance that the market is going to make all-time high and continue higher. There's a reason why I've been saying this all year long this year, is because there's this big picture. I was fear. I'm a human being. When markets are coming down like this, I feel like maybe this market will crash. But I understood there's a big picture. We're still in this primary term. So I came up to the conclusion that this market, let me see if my light works. It's back on. I get a conclusion that that there's a good chance that we'll move higher. So all the chaos we've been hearing on the news, all the chaos we've been seeing on tweets and blogs, and Zero Hedge is like one of the most important, pretty prominent publications. So many people read Zero Hedge. So many people comment on everything. Do you know that they've been calling the crash since like there are articles I read since like 2013. That, this signal never failed to crash this market. This again, that again. And then they're coming out with something similar again, 2016, I think. That, this signal has never failed in history, that this whole market is going to crash. They've been saying something similar to that since 2013. They have Zero Hedge. They're not traders. I don't think they're even investors. They make money off of maybe the people who write they are, but then the whole company is make money off of your visit and clicking on their ads and whatnot, right? So they must produce provocative analysis so that you come and read it. That's exactly what Marc Faber's been doing since 2011. He never once said he was wrong. And he's still coming. He probably never stop. It's insane. He's a lunatic. He's a dumbass. And I'm mad because his idiocracy is not helping anybody else. It's just what makes me mad is there's so many people could have profited from this market since 2011. But because of him, so many people are probably miserable. So many people probably is not making money. And probably even now, so many people are fearful because of what he's been saying. And because CNBC, they've been, producing and writing articles and things like that. I don't know. I just want to kind of get that out. And let you guys know. And I don't know. I just feel like everybody's so fake, especially in Twitter and stock tweets. And don't even believe me. Don't even listen to me. If I say something stupid, don't listen to me. Just block me. I don't need your follows. I don't need your money. I don't need anything from you. I don't know. I just like to what's the word? Not like be a hero, but I just want to be that person that could possibly help some others and expose others at the same time. And just kind of, because I don't think I'm gonna be here that long. Again, I'm a single guy, and I have a lot of time, so I can do stuff like this. As soon as I have a family and things like that, I won't be doing this. I won't be coming out and producing videos and exposing people or like helping you. I won't be. I don't have time for this. I need time for my family. So as much as you know, strength that I have and zeal and passion that I have for this game, because I love this game, I want to just continue to come out and do this for you guys and help you out as much as I can, and that's kind of my goal. You know, I don't presume to know everything about the market, because I don't. I made plenty of wrong calls, but you know what? From me, at least I'll tell you. I'll let you know. If I'm wrong, I'm wrong. I didn't see that coming. And hey, I undermined it. You know, I'll let you know that I made a wrong call. What I won't do though is for 6-7 years, every year coming out saying that there's gonna be a market crash. That's what I won't do. Marc Faber, man, stop it. If I see another of your crash article, you know, I mean, I'm gonna like seriously like have to find you and, you know, ask you to say sorry to everybody with my camera. Have a great night.